what are your expectations for the inflation data and likely market reaction?
Well, this could be the biggest day, obviously the biggest day for data year to date right now. All eyes, especially the Fed, are looking towards later today, the CPI report. Consensus is about 6.5, 6.5%. And if we see anything above that, we could see markets reverse. We've seen, a great year-to-date rally. But I think a lot of expectations are built in to see a below sub 6.5% CPI data read. So you have to be very nimble in this market.
Yeah, JP Morgan came out yesterday and they said that if we get above a 6.6% in CPI number, markets are going to tank, fall 2.5%, 3%. If we get below 6.2, however, that the markets are going to soar. I mean, that's only literally 0.4% difference on the inflation number and a potential 6% sort of delta in the way the market moves. Are you that surgical about it? I mean, do you care to the 10th how it comes in, Robert?
No, for us at Blanky Schein Wealth Management, we're long-term investors. We're taking an advantage of anything that the market actually gives us. So we're ready for this morning. We've been positioning earlier this week and even last week for whatever the number is. And again, as you know, we don't trade the number, or at least the headline as soon as it comes out. You kind of let it, get into the marketplace and actually get into the read itself. Because what the Fed's going to actually have to do after this, and the conversation is going to pivot, is to the labor market, right? So the Fed's going to actually now turn, let's say if inflation, and there's a lot of inflationary pressures coming down. If you look at housing, you look at the cumulative effect of what rising interest rates, of what they've done to consumers, that's going to play out in 2023. That's going to be a big impact to corporate earnings. And that's the question mark that we're going to have to wait and see how corporations report for the fourth quarter right now. But the Fed's going to now pivot, we believe, to what the labor market, maybe if there's tension or some slack in the labor market, that might help the CPI number.
What are you advising your clients to do right now? Do we sit on our hands? Do we start to dollar cost average into stocks? What are we doing?
Yeah, there's a lot of generational buys out there right now. There's a lot of things that are coming our way. Again, we've got, treasuries. Put your cash to work in treasuries. We're waiting for markets to present opportunities. The short term, again, the treasury is over 4% right now on short term. But there's also generational bias. One of the companies we like is Disney right now. You talked about it at the top of the hour. I mean, in the last 24 hours, if you look at the news cycle, there's a proxy fight. And proxy fights can get messy, as we've known, historically speaking, through the boardroom. But the reality is that they have to unlock shareholder value. That's really the message here. So we we're saying to our clients, let's say our parents or grandparents, even great-grandparents at Blanky Schein Wealth Management, this is a generational buy, because you're literally getting Disney, as an example, below what you saw in 2019 when they launched Disney Plus. And now they have over 164 million subscribers worldwide. They're going to, get on cost cutting, and they're going to get the ship right. The magic is back at Disney, we believe, and it's a buy under $100 a share.